so far so good. Large cap stocks are holding on, but do you think it's a matter of time we will also get hit with what's happening in global markets, whether it's oil or commodities, everything is down?
Well, we've been holding a slightly different view that some of the troubles that we are seeing in the overseas market are actually in a way positive for India, and to that extent, I'm not entirely surprised at the kind of decoupling that we have seen in the of the Indian markets versus the overseas markets, at least over the last 1 month or so. So with obviously, as we know, that with commodity prices, oil, etc., and some of the other metal commodity prices also coming off, I think at one level it kind of is positive from an India long-term perspective. And I think there is increasingly there's a case where we need to see whether this tightening by the central bank is probably likely to continue. I don't really think so. That is going to probably be the case going forward. So markets are probably looking forward to a turn from the point of view of interest rates as well in India, and therefore. And we are also coming from the situation where since the start of this calendar year, the US was the only market which was actually rising, and it was positive for most part of the year, and most of the other emerging markets along with their currencies are actually come off, and I think it's a reversal of that trade as of now. US markets did become a little expensive and were looking a little heavy, and I think that's the reason why we've seen this correction. But in the meanwhile, many of the emerging markets had already corrected, and so had their currencies. So I think maybe there is a possibility of a DM to EM trade developing once again for the near future.
So Taher, in this time when we've managed to rough it out as opposed to what other US markets or other developed markets have done, but still lies that 2019 election uncertainty that everyone's been talking about just 5 to 6 months from now. What would you say would be the right investor approach? Is it still prudent to keep maybe 20–30% cash on the sidelines because the market is going to give you enough opportunities, I guess, in the next few months wherein you would get to deploy the cash?
I'm not sure if that works very well, and it is very easy to do, and those quantums of cash are a little difficult to deploy if the trend goes against you. And we've seen that in the past. We saw that very recently, even after the event of state elections passed out, and we saw that the market saw a decent rally after that. So I'm not sure if that is something which works. We are happy being more or less fully invested. We of course try to make sure that we defend ourselves in other ways by taking the right sector exposures and the right stock exposures. Of course, we can't shield everything, but if we can shield a good part of it, we should be okay. But cash in and cash out is not a strategy which is, at least from our perspective, or we're not probably as well tuned in doing that. So we typically avoid those kind of calls, irrespective of what the nature of the event is.
Okay, fair enough. Taher, what sort of a balance would you keep in your portfolio currently? Would you make it more defensive, with some exposure to financials, or would you start diversifying and increase some bit of allocation to investment-led themes as well? Because in the run-up to the general elections, with the interim budget coming up, there's much talk about how the investment cycle would get pushed.
So, from a mindset perspective, and especially over the last few months, let's say, since the start of this calendar year at least, we have been kind of, trying to make sure that at least we are not very, we try to buy into ideas where we feel that the valuations are reasonable and comfortable. We don't really want to, it is not an environment immediately right now where we can significantly, buy things at premium or overpay. That's something which is a complete no-no. So we are trying to only find pockets which are reasonable from the point of view of at least the medium to long term perspective of those businesses without worrying very much about the short term. Of course, many of the macro parameters over the last 2-3 months have turned once again back in India's favor. So that gives a little more leeway in order to be a trifle more aggressive. But by and large, it is still we know that there are certain roadblocks. We know that there are certain things which have to clear out, and therefore it is still not time to be overly aggressive. But yes, I mean we are largely constructive on sectors where we believe that the risk reward is reasonable. And incrementally, like for example, even in the mid and small cap space, we think now it's a better time compared to what it was 1 year ago or 18 months ago. Mid and small caps are starting to be a little more attractive. They are not cheap, but they are still a lot more attractive than what they were, 1 year ago. And I think they are best bought during times when they are down and they are kind of ignored by the market. And if you have a 2-3 year horizon, I think they pay off pretty well. So we are kind of trying to find ideas in that direction, or maybe in sectors where we believe that the valuations are reasonable.